Forget standard retail logic. Today, we're decoding the true institutional blueprint. We are tracking real smart money footprints. We're strictly hunting the algorithmic draw on liquidity. Let's jump right into the algorithmic objective for this week. The strongest currency is the US dollar. The absolute weakest is the British pound. The ultimate setup? A tactical long on USD. We're targeting premium liquidity voids. Here is the exact institutional logic why.
So what is smart money actually trying to achieve next week? The algorithm constantly seeks out liquidity. Retail traders just see random price action. Institutions, though, they see engineered volatility. They're trapping late sellers right now. They're targeting premium imbalances. Here is our overarching macro map. It's ranked purely by institutional intent. NZD is heavily exposed to liquidations. AUD is distributing after soft inflation data. EUR is getting heavily shorted. But watch closely. GBP hides massive speculative shorts. CHF confirms broad weakness across the board. CAD shocks short sellers with recent inflation data. USD is firmly and aggressively bullish. Finally, JPY is just broadly liquidated. Smart money is quietly loading massive USD longs. They're actually front-running sticky core PCE data. Remember, institutions never react to raw numbers. They position themselves long before the news even drops. That steady accumulation is fully intact. But here's what most traders are missing. The COT positioning tells another story entirely for the pound. It exposes a massive hidden distribution campaign. Large speculators quietly added nearly 33,000 short contracts. Spot price looked completely flat, right? But the underlying pressure is severely bearish. Retail sees upcoming central bank speeches and NFP as fundamental news. Smart money sees them strictly as liquidity injections. These are engineered volatility catalysts. They perfectly facilitate massive capital rotation. This builds the ultimate liquidity sweeps. So where could retail become trapped? Smart money may be creating a trap right now. They create inducement to blind the masses. Then they violently reverse price to hunt those stops. The next liquidity target changes everything. Just look at this weekly Euro-USD distribution phase. Prices entered a deep discount zone. It perfectly purged external sell-side liquidity at 1.1343. This was absolutely not a random move. It was a deeply calculated, algorithmic sweep. Stepping down to the daily time frame reveals something massive. There's an unmitigated fair value gap sitting above current price. Located between 1.1440 and 1.1510, this void is an absolute algorithmic magnet. Price must eventually return to rebalance this array. This brings us to our precise execution logic. The H4 timeframe shows a clear market structure shift. It broke right above prior lower highs. In the aftermath, the H1 chart left a pristine optimal trade entry zone. Institutional order flow is fully confirmed here. The smart money trap is now perfectly set. Institutions engineered a minor inducement just above 1.1370. They want retail short sellers entirely trapped. Anyone selling the breakdown below 1.1400 is heavily underwater. Their panic stop losses will provide our exact entry fuel. Here are your strict execution parameters for a tactical retracement long. We enter precisely at 1.1365. This utilizes H1 and H4 fair value gap confluence. The stop loss rests safely below the external swing at 1.1330. We target 1.1420 to sweep internal liquidity. Next is the daily void at 1.1460. Finally, leave a runner for the 1.1500 premium range target. Every valid setup requires strict invalidation parameters. A daily close below 1.1330 completely destroys this thesis. If that happens, the broader macro distribution simply continues. We strictly cut risk and step aside immediately. Always remember this core institutional philosophy. Liquidity leaves footprints before price leaves trends. The charts will always lie to the untrained eye. True algorithmic footprints, however, can never hide. To follow future trading opportunities and detailed market breakdowns, you must take action. You can open your trading account with FXTM. Just use the link in the pinned comment. Study the data. Follow the footprints. Because if you aren't hunting the liquidity, whose liquidity is hunting you?